Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So let me just say a couple things on that. I've been reading Letters from a Stoic by Seneca, a Roman philosopher that lived during the time of Nero and just after the time of Christ. And this is a quote from Letters from a Stoic. "The life of folly is empty of gratitude, full of anxiety. It is focused wholly on the future. I have met in my time, including myself when I look in the mirror, traders who are exclusively focused on what they're just about absolutely positive is going to happen. And they really can't get their minds off of what they're absolutely sure is going to happen. And they start to spend money that they're going to make in the markets before that money is realized." Seneca continues, "And what sort of life do you think is meant by life of folly? Our own life, precipitated by blind desire into activities that are likely to bring us harm and will certainly never bring us satisfaction, never thinking how pleasant it is to ask for nothing and how splendid it is to be complete and independent of fortune." If your trading is dependent on fortune, then we need to have a talk about options. If you are solely basing your trading strategies, for instance, on the notions that other people have that you've read online about a direction that a currency might go, please consider that the path of the world of finance is littered with people who are absolutely positive that they had done everything in their power to manage their risk and that nothing bad could ever happen to them. And the last year has proven this over and over again, that arrogance does not have any room in trading. It just doesn't. So just remember that as we talk, that nothing that I'm about to say really is meant to promise anything, and we never want to get ahead of ourselves in trading, and that's why it's just so important that we have this discussion sort of about how options can be a part of the trading strategy. I think you need to think of as many ways as possible to hedge your risk. All right, some of you are familiar with this presentation. I can't get enough of it because I can't stop talking about the same thing, which is that the currency markets are very similar in a lot of respects to anything else. Some of the best things in life come as a surprise, not as something that we plan out and not as something that we can sort of think of as a sure bet. Some of the biggest trends in the currency markets, and once again, one of the ones that I think is beginning to develop, is that the British pound and the UK economy have been way, 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 way oversold, big time. Like Steve, is maybe as much as last year when I was talking about the dollar being ridiculously oversold. I'm kind of at the point where the British economy has really taken the brunt of a lot of jokes, and we're sort of at the point where I think a lot of people are going to be taken by surprise here. And because I can't be sure of that, and because no one ever can tell the future, and because hope is not a trading strategy, it might be a political strategy in the United States right now, but it's certainly not a trading strategy. Because of that, there's an important element of hedging risk or managing risk. We've talked about this before, and today we're going to build on this concept, and I'm going to add some things to our discussion that we've had in the past about moving averages and about statistics. And I want to start it off by laying the groundwork, and I want to lay the groundwork over the next, I'd say 10 minutes, and then I want to spend as much time as possible discussing some additions to this groundwork. So if I move a little bit quickly through laying the foundation here, it's simply because I want to set the tone, get some basic principles out in the open, and then I want to move right into why I think the British pound is overdone and what I think are some available ways to engage ourselves in the process of thinking about it. You can see a red line in the middle of the chart on the screen right here. That is the 62 simple moving average. That's simply the average of the closing price of this currency, the British pound, over the last 62 periods of time. Equally useful would be a 50 if you wanted to use that. In fact, you can use any moving average that you want, and there is no magic moving average. There is no holy grail. In my opinion, money management and statistics and your own sense of responsibility are the holy grail. Those are things that I focus on. So I want to make sure that we don't get so caught up in the fact that I'm looking at one particular moving average. And like I said, I'd really like to lay the foundation and look at some charts, in particular for the BPX and the yen as well, the yuck as well. So here's the chart. It's the daily. We're going to do some of our work on the daily because that's, we're talking about options, and we can sort of engage in strategies that might have a time horizon measured in weeks and months rather than measured just in hours or days. If there are those of you who have tried short-term trading and you've been sort of in and out of the market really quickly on a daily basis, I don't mean to say anything today that would be critical of you. In fact, I have methodologies that I use that are short-term in nature all the time. What I really like about the nature of trading an option with an expiration date out into the future is that we could look at the daily chart. How often are you going to look at the daily chart? You're going to look at it probably once a day. But what's amazing is that if you take the time to look at it that once a day, and you take the time to maybe develop a longer-term time horizon on some of the trades you take, it does lead us in some cases to be more patient, responsible individuals, not driven to and fro sort of by the vagaries of economic reports and whatever. I think of the markets in terms of equilibrium, and I'm constantly asking myself, are we in equilibrium or are we out of equilibrium? When considering a developing trend, for example, or a trend that maybe hasn't even started yet, at the very early stages, what I want to ask myself is, are we out of whack here? And how do I measure out of whack? There are 124 of you here. Some of you are familiar with statistics, but I want to really focus on something right now. Is it really enough to hear a guy on television say, I think the market is out of equilibrium? Or is it really enough to hear even me, some windbag blowhard from West Virginia that travels the world and just happens to speak to groups of people? I mean, do you really want to just listen to that person, or do you want to be able to verify what that person has to say? And I think at the base here, what I want to really tell you is I want to share some things with you today that will help you sort of independently verify the truth or not truth of what I'm saying here. And I think that's probably important to Steve as well. When I trade a trend, or when I get ready to trade a trend, I'm asking myself one question, and I'm only engaging in the process of trying to tell a story about the markets. I tell a story through statistics, but I'm still just telling a story. When I say to you, I think the British pound has been overdone, or the UK economy has been excruciatingly oversold, or whatever, I'm really telling you a story about the markets. Now, am I just making it up? And that's the difference. If you're just listening to it on TV, or you're just sort of focusing on something that you read in a book, and it's not independently verifiable for yourself, then you're just reading fiction. And what I want to know is, are you reading fiction or are you reading nonfiction about the markets? I want to talk about this 62 simple moving average as Main Street as opposed to the suburbs. I have a comparison that I make. When a currency like BPX, when BPX is near the 50 or near the 62 simple moving average on the daily chart, I think of that as Main Street, or I think of that as equilibrium. And we'll talk about why I believe that in a moment. That's how I think of it. When it's away from the 62 or the 50 on that daily chart, I think of it as journeying out to the suburbs. So get those analogies in your mind. And I'm only asking myself a question. Are we way, 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 way out in the suburbs? Or are we really close to Main Street? Those are the only two questions I use to start things off. And it gives me an objective base to start from. There's only three things that we could possibly do with the BPX right now. One is we could buy the BPX, and Steve, correct me if I'm wrong, if we buy the BPX, we're actually betting that the dollar goes up and the British pound goes down.
That is correct.
Yep, okay.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.